Hello there, welcome to the Week Ahead show here on IGTV from the very heart of London. Britain finished up the week with borrowing down by £3 billion since April. Elsewhere, BHP Billiton, the world's #1 miner, recorded its worst ever annual loss. Oil prices surged to their highest in 6 weeks, and the US dollar was near an 8-week low against major currencies due to the minutes from the Federal Reserve's July meeting showing the policymakers were unlikely to raise interest rates anytime soon. So what is happening on Monday? Well, we will be marking the 1-year anniversary since the Chinese stock market crash. So even though it looks like it's going to be a quiet day of it, you really can never tell. Now, the data we will be focusing on, as you can see just there, comes from the US. It's the Chicago Fed National Activity Index, which gives us an overall idea of economic activity and related inflationary pressure, obviously crucial next week. On Tuesday, we'll be concentrating on those PMI numbers, which are coming from all over the place, as well as EU consumer confidence and US new home sales. On Wednesday, we start the day with New Zealand's trade balance, more from Japan there as well. We've got Germany's GDP and more US domestic data. On Thursday, on top of our agenda will be the UK's CBI trades number, as well as even more US numbers to digest before we get set for Friday. Now, this is a big day because, as you can see on the bottom of this list, Janet Yellen will speak and the world will be listening to every single word and indeed her hesitation as well. So, to conclude and wrap up, the 3 key economic data releases that we're going to be watching this week are the UK's CBI industrial trends orders for August, PMI figures from all over the globe, and again, Janet Yellen's speech in the Jackson Hole. Josh Mahoney is here to explain how each one of these events will dictate the week ahead of those numbers. Let's start with the UK, because actually the UK's had a mixed set of numbers really, because employment's up, shoppers keep spending their money, the weak sterling has its advantages, tourism being one of them, but actually we've had some really bad numbers as well. Business confidence wobbling all over the place, inflation, we don't know what direction that's going in. What would you say, what would be your conclusion, and what are we going to look to?
I think crucially there's 2 sides of the story, right? There's what's happening in terms of the economy. I guess there's going to be some sort of hesitation in terms of investment for some people that are already within the UK, but there's certainly, as you said, with retail sales and like, there's going to be a lot of people flocking into the UK because of the fact that we are a very well established country, and down the line, let's say 2, 3, 4 years, you know, I'm sure we'll be in a very good place. There's a lot of uncertainty at the moment, but it's a good long-term investment and people are seeing it as such, and you're seeing significant investment in the UK. The flip side of it is sentiment internally is something that's actually a bit of a worry. So certainly there's 2 sides of the coin, but for the time being, I think people are really focusing on the fact that actually it doesn't really look as bad as we thought it would do. Same kind of thing in terms of the housing market. So certainly the 2 readings that we've got coming out this week, business investment and CBI industrial orders expectations, essentially both of them are actually looking for a deterioration of those previous figures. Whether that happens or not, really, I mean, look, ultimately we're in a position where everyone's sort of hanging on the word of every single piece of data that comes out of the UK. That's why we're seeing such significant volatility in terms of the pound. But we have got a very clearly defined trend. And if we looked at what happened in terms of the pound itself, we can see that actually it's had a bit of a topsy-turvy week so far. You can see that we broke higher quite heavily. If I take it onto the 4-hour, we can see that we saw this sharp appreciation earlier in the week and we're starting to turn lower. Now, ultimately, the way that I perceive it is this. If we take it back to the daily time frame, you can see that we have this clearly defined trend line coming into play, and that's really coinciding with that 76.4. I'm hoping that we can get back up to that level to then short it once more. We are seeing this move lower in the short term. We'll take it back to the 4-hour. We are seeing this short-term move, the retracement, and as such, unless we break below this low that we've got here, 12978, then it could be a good potential area to be getting long around this 13027. So yes, we're seeing some selling at the moment, but unless we see a close below this 12978, there's a chance we could see another bounce before we ultimately get back on trend and start selling off once more. What happens in terms of these releases really should be quite crucial in terms of the direction of this pair going forward. Yeah.
There's really 2 sides to the sterling at the moment, isn't there? Let's talk about the PMI numbers then, shall we? Because a lot of these are coming from Europe.
They are, and crucially, there's very little expectations in terms of change, which I think is actually a good thing, because because markets are expecting pretty much no change across the board, despite the fact that they're flash readings, so it's the first one of a new month. The fact that we've got markets expecting them to all pretty much stay the same, and we know that they're not going to stay the same, it means that we're probably likely to see more volatility off the back of it. The only reading that we're actually expecting to see any sort of decent movement is the French manufacturing PMI, and that's actually the only number that's below 50. So there's expected improvement, not necessarily to take it above that 50 mark, but certainly that's one to be looking out for. If the French can get their number above 50, and that means that they're in expansion, that could be highly notable. Elsewhere, of course, always looking out for the likes of German manufacturing and the sort of whole numbers coming out of the Eurozone and the composite readings. But certainly the fact that the market expectations are for very little movement actually could set us up for some decent volatility, which is exactly what we've been seeing recently. You can see August has been a pretty choppy month, and you can see recently, the last couple of weeks or so, we've really started to see some significant gains for the euro against the dollar. It flies in the face of theory in terms of monetary policy, certainly because we don't think that the ECB are going to be cutting back on their easing policies anytime soon. And meanwhile, yes, we did hear from the FOMC earlier in the week, and they were saying that they maybe, well, essentially it's more dovish than we thought that they would be, but ultimately that was prior to the jobs report. The jobs report came out and it was pretty good. I do think they want to move soon. December is a potential. I think markets, last time I checked, were pricing in about a 50% chance. So that ultimately means a 50% chance of 2016 rate rise. Now, in terms of the wider picture, you can see we topped out in May. We've been trending lower since then. We've managed to do a very deep retracement. You can see recently we've seen this higher highs, higher lows, but I think this is a retracement of that deterioration from the referendum, and as long as we don't break up above this 114.28, I'm looking for signs of a reversal. You can see the stochastics turning over, but arguably that's not as reliable as pure price action itself, and you can see here actually that 76.4 is providing the support for a potential head and shoulders formation. So I do think if we can get below that 76.4 at 113.05, that could pave the way for a decent deterioration in the euro.
All right, Josh, let's pick up on some of what you were saying about the US then, because next week on Friday in the afternoon, we've got the Jackson Hole situation. You were saying about the rate rises. At one point, at the beginning of the year, we were talking about 4. Now we're talking about 1.
Yeah,
if that. So what a difference. Do you think Friday will change our expectations on these rate rises?
The thing is that these Jackson Hole symposiums have actually got a history of seeing big announcements. We saw Bernanke announcing QE there. We also saw Greenspan using it as a big platform to be announcing something. Now, that doesn't necessarily mean that Janet Yellen has to come out and do something particularly special. I guess it's almost like tradition that they have to come out and say something big. Doesn't necessarily mean that it will happen, but it does kind of raise the expectations for this meeting, and everyone's coming into this thinking that we could see something that could really shape what our expectations are going forward. Ultimately, she's not going to announce a new QE program or like, so she doesn't really have the power to enact something massive. Do you know what I mean? She can't
Ben did.
Sorry?
Ben did. He
did, but the point is that she's in a different position. He was in a position to actually announce a whole new policy, and you know, that can be decided ahead of the meeting, and that can be something that he has a big say in. On the flip side, it's on a case-by-case basis in terms of when the Fed are actually going to be raising rates. So she can't say, we're going to raise rates within 2016. And then at each meeting, if the data doesn't point that way, then the members are just going to vote it down. So I don't think she necessarily has the sort of position really to actually bring anything too big to the table. But certainly, you know, if she shapes what thinking is going forward, or if she was going to say something that's quite big to change the way that people are thinking in the markets for a rate rise, I think this would be the platform for it. So certainly it's something really big to be looking out for. Friday is when we're expecting her to actually speak. I wanted to talk about what's happening in terms of the dollar basket. The dollar basket is actually heavily weighted towards the euro dollar. So certainly this has a big influence on what's happening in terms of euro dollar, and this is influenced heavily by what's happening in euro dollar. You can see that we have come into this big deep retracement of that rally that we saw at the back end of June. So the same way that I was talking about the euro in terms of the devaluation, and we've been seeing a retracement of that, we're seeing something similar in my eyes. And you can see that we came into this trendline support. We've now rallied somewhat back past it, but certainly this retracement has a similar form to that which we saw in June, with that sort of three-legged move before another leg higher, and we're seeing something similar now. I do think that we're likely to see another move higher. If we take it back to the weekly time frame, you can see that ultimately we are within this period of sort of range-bound price action. We're coming from the bottom end of this, and certainly at a period where we're expecting others to be easing and the Fed to actually be tightening, you would expect us to move back towards the top end of this range, towards this sort of 100 mark. And as such, this retracement we're seeing at the moment looks very similar to what we saw previously. So I don't think we're going to break back below that previous low that we had back in June. And I do think we're going to be returning back on point and start moving higher soon enough, which means we're going to start seeing a sell-off in terms of the euro. So this is going to be a really crucial market to be looking out for. This alongside the euro, how they start responding, and whether we can actually start to see the dollar really start to surge back. The dollar, of course, is the most commonly traded currency against all the other currencies out there. So if we do see a big surge in terms of the dollar, it's really going to change the sort of landscape in terms of the FX market.
Stock market, though, still historical highs, so it's a bizarre situation we're in. Jobs market holding up well, inflation still weak. It's a mixed bag, isn't it? Yeah. Let's talk about corporate data, because on Monday there is an NA actually. We're going to start with a Tuesday, if we may, because we've got international news. Actually, I've gone ahead of myself. Let's go back to Monday, because international news is, of course, important because it's coming from miners, tourism, Kingspan Group, building materials as well. So it's all happening on Monday, just internationally. There's me getting all domestic on you. On Tuesday, we're going to hear from Rank Group there, which delayed its earnings report due to its continued wooing of William Hill. But this £3 billion deal has actually been abandoned for now. Persimmon, we're going to look at the chart in a minute or two. Hostel World as well continues to post impressive numbers. Of course, it's their peak season. Best Buys, it's their 50th birthday on Monday, and to celebrate, the company has put together 50 tech deals and discounts for just 50 hours. It starts from 10 p.m. Eastern Time. On Wednesday, more from the tourism industry. Another challenger bank as well posts their earnings, their one savings on the list, and a sector doing very well at the moment, it must be said. A mining giant not doing so well, it's Glencore. We're going to really dive into that one as well. There'll be a special feature show here on IG2. On Thursday, it's another eclectic mix of reports. We've got financials, jewellery there, miners again, energy, retail and shoes. On Friday, we're going to be waiting for Coca-Cola, Prada, Marshalls and more. So actually, it's a week of really interesting stocks, actually, a bit different. It's not so much about the blue chips. Josh is still here. Where should we begin with this one? Because miners, wow, things can only get better for the likes of Glencore.
They can, but then again, we've actually seen a massive rise in terms of their share price over the year so far. So actually, it depends where you bought. If you've been holding their stock for some time, then yeah, it's not particularly been a good time. But ultimately, if you bought anywhere near the lows, we're talking about 160%, I think. Let's see what the rise is from the lows. 176 now since the lows in January 2016. So certainly some people have been making hay on this stock. Now you see this is the weekly time frame. You can see here that ultimately we are now trending high. You see this higher high, higher low. So we are trending higher. The worry here is that we've got a very overextended market, and you can see previously when we're sort of in this sort of ecstatic phase, we're seeing these really big candles, these really big green candles moving higher week on week. Now what we're seeing now is that's sort of fading, and we're now seeing, yes, we're seeing gains, but we're starting to see it a lot more small, a lot lower volatility off the back of that. Same time that we're seeing the stochastics start to roll over. Now, ultimately, stochastics aren't that great in terms of a trending market, but because we're looking at it on the weekly time frame, this should actually be a little bit more useful. Looking at also, we've got this 100-week SMA coming in as potential resistance. So not necessarily calling the top of the market, but certainly saying that this is slowing down in terms of its ascent. You can see here we've got a sort of wedge pattern coming into play, where essentially we had these sort of wide moves, and now it's really tightening, which really corresponds to what I was saying there. 182.4, I think is going to be a really interesting level alongside these previous peaks around 175. That is your first swing low alongside these peaks that you can see back in April, and then the one also in March. If we can break through that, and certainly earnings are the kind of thing that could see a big sharp move. If we can break through that and hold price action below that level, I do think we could see a pretty sharp deterioration just to take back some of the gains that we have been seeing of late. Doesn't necessarily mean we're going to see an overall reversal, but certainly it feels like with the slowing down in terms of price action, in terms of directional movement, it feels like we could start to turn over somewhat. But, you know, earnings are the kind of thing that can push it in either direction. And certainly if we manage to break back up above this wedge, then we could actually get back onto a more convincing trend rather than this sort of slow grind higher that we've been seeing over the last month or so.
And with the mining industry, it's kind of the good, the bad and the ugly, isn't it? And I suppose Glencore's good.
Yeah, well, like I said, it depends where you bought.
Well, exactly that. OK, Persimmon then, this is another one that could potentially be awful, but we haven't yet seen it. Obviously, it's so reliant on if Britain enters a recession or not, because if we do, obviously wages will be affected, people won't think about a house. People coming into the UK from Europe as well, there's a lot of factors affecting this industry.
Yes, but we also heard from them recently, and they said that they thought that there were going to be opportunities from Brexit. And I guess people always, and certainly when we first sort of got into this situation after the referendum, everyone saw it in a very negative light.
True.
But at the same time, you've got a very robust housing market that generally has shown itself to always recover. So you're seeing that a lot of the time when prices are going down, I think there's so much demand. There's so many people out there that actually have been desperate to buy. Actually, domestically, there's a lot of demand. And at the same time, yes, I'm sure that there are some people that are probably going to feel like they might be unwelcome or their jobs might move abroad if we leave the EU. Still an if. But at the same time, with the pound where it is at the moment and with the sort of long-term stability of the UK, I just think there's going to be a lot of people that are going to be trying to get in at these current prices, because if you're living abroad and you get the opportunity to buy into London houses and UK houses at such a discount, knowing full well that the pound, you know, in like 5-6 years' time is not going to be as cheap as it is right now, I just think there's going to be a lot of people getting in. So ultimately, I don't personally think the housing market's necessarily going to crash to the extent that people think it is going to. And it seems like Persimmon think the same kind of way, really. I think there's going to be sort of benefits to this in the same way that there are going to certainly be some negative things that come with this whole Brexit thing. In terms of price action, you can see exactly that. The initial reaction was very negative. And since then, really, we've just continued to grind higher, certainly in the same way that we were talking about Glencore's, the sort of price action has not necessarily got the same kind of conviction as it did before, which is to be expected because as we move further away from that referendum decision, of course, we sort of normalise rather than those massive moves that we saw previously. But in terms of price action at the moment, you can see we are continuing to move higher. The 4-hour chart should show you essentially we're tracking this 50-period SMA on 4 hours, providing us with some decent support. Ultimately, I would just say that we're likely to continue this sort of grind higher unless we take out that first swing low, on this occasion 1639. But, you know, I just think that there's not particularly high expectations on them. And I do think that they're probably in a good position to outperform rather than underperform, and that could...
Which is quite ironic in a way, isn't it, considering the amount of fears and conversations everybody was having about this sector. Resilience.
Resilient, yeah, and unfortunately resilient. Well, it depends, actually, because I wouldn't mind buying a place and I wouldn't mind getting a little 50% discount or something. I just don't think it's going to happen, to be honest.
That's a shame for me. All right, let's talk about advertising, because it's another sector that could be really badly affected by Brexit, because people won't be investing in advertisements. But with WPP, it's been really investing in this digital advertisement, hasn't it? That's the direction, and it's determined to beat its competitors on that. Yeah, and crucially, it's going to be really interesting because Sir Martin Sorrell was saying prior to the Brexit, he was one of those big voices that was saying, you know, this is going to be really bad for the UK, this is going to be really bad for advertising and marketing and the like. Well, is that actually going to come to fruition? Is it just words and bluster, or is this actually really going to affect the company? In the same way that prior to the referendum, they were saying about, you know, George Osborne was saying, I'm going to bring in this emergency budget, and it's sort of scaremongering to an extent. And then once it actually happened, he has to go to the other side. He doesn't want to talk down his economy. So then all of a sudden he doesn't actually do that and start saying, oh, we'll be all right and we'll make the best deal possible. So it'll be interesting to see if we've got the same kind of thing in terms of WPP. The crucial thing to note is the fact that actually only 14% of their revenues actually come from the UK. So they're not wholly reliant on the UK at all. So even if they did see some sort of deterioration in terms of their UK business, that's not the be-all and end-all of their business. So certainly in terms of price action, we've actually been seeing a pretty robust couple of months. And if I take it back to the weekly time frame to see a sort of wider perspective, you can see that, yes, we generally have these sort of 2 to 3 month dips, but it generally gets back on point and generally moves back towards the upside. So, you know, it is a pretty solid stock.
and we are hitting highs. You know, we have got this potential trendline resistance, and you're seeing this market looking rather overextended in terms of the fact that we've got the stochastics looking to roll over and looking to cross. We've also got the fact that we've seen a substantial amount of gains and not really too much let up. I just feel like we could possibly see some sort of pullback. But pullbacks on the whole have been good buying opportunities, because if you look at these wider sort of swing lows, generally they haven't created a lower low, and as such, any pullback, as long as it doesn't take out this 1460 mark, could be a good opportunity to get long once more.
Brexit? What Brexit? Okay, that is it from us. That was Josh Mahoney there, taking us through all of the agenda for next week to keep our eyes peeled for. Thank you for watching, very much appreciated. Have a great weekend and enjoy the Olympics. We're certainly glued to it here. As it stands, Great Britain is still second.
Smashing it.
How phenomenal is that? See ya, goodbye.